Good morning. This is Lisa Farquharson with the Dalles Area Chamber of Commerce. We are excited to bring you this next webinar, and it is all about Paycheck Protection Program reporting and debt forgiveness guidelines. And we are excited that Gregory Price with the SBDC here right in our backyard at the Columbia Gorge Community College will be presenting with his speakers and panel that we are bringing to you today in hopes that you will better understand and be able to take advantage and maximize your forgivable part of this loan. So Greg, go ahead and take this away.
List for joining. We have Dillon Borton from KeyBank, and Dillon, if you want to introduce yourself, please go ahead.
Yeah, thanks, Greg, and thanks for everybody for letting me be on the call this morning. I'm Dillon Borton, branch manager of KeyBank here in Hood River. We sit here on the Heights on 12th Street in Hood River, and been really engaged with this PPP loan program. We're trying to get out as much information to help all of our small businesses in the community when you need it now more than ever. So thanks for letting me be part of the panel.
Great. Thank you, Dillon. And Noah Brockman from our Capital Access team.
Morning. Noah Brockman, part of the Oregon SBDC Network, provides some statewide services. One of those statewide services is a program 10 years running where we help business owners with access to capital. The program's called the Capital Access Team. And so once the coronavirus pandemic occurred, we shifted gears from working on accessing capital to include pandemic-related capital access resources. So here today to help provide insights on that.
Thank you, Noah. The Capital Access team is a fantastic resource, and Noah's been a huge asset of mine and a wealth of knowledge, as has Thomas Schnell from Business Oregon. I feel lucky to have him as one of my most important resources. Thomas, do you want to introduce yourself?
You bet, Greg, and thank you. And likewise, I mean, it's been fantastic working with you and Noah. Great partnership. Really enjoy that. I've been getting a lot of stuff out, so kudos to everybody there and keep it up. Thank you. So Tom Schnell, business finance officer with Business Oregon. Business Oregon is the state's economic development agency. And just a little bit background, I've got about 25 years of commercial lending, a lot of SBA lending involved in that. And currently what I do is a lot of the stuff that we do at Business Oregon mirrors the SBA in that we are a state agency, where the SBA is a federal agency. So a lot of the programs that we do have and offer are very similar to that. We work very closely with our financial institutions or banks and credit unions on helping them to deploy and leverage their capital. And so I've been very heavily involved with both Noah and Greg and the local banks there too, and especially the Paycheck Protection Program and the EIDL loan program too at the SBA. So just a little bit of background on myself.
Thanks, Tom. So, and we regret to inform that Columbia Bank was not able to be on the panel today. One important note for all the attendees is we don't work for the SBA. We don't directly represent the SBA. We, as individuals, nor our agencies, wrote the rules that govern the PPP. We simply interpret them the best we can and work in a collaborative effort to get that information out to the rest of the state and our stakeholders. So I just want everybody to bear that in mind, that the first and most important resource for all of you who have a PP loan is your bank and your loan officer. They're the people ultimately you'll be answering to and reporting to. So please make sure, no matter what we say here, you need to be deferring to them as well, and make sure that you are in line with their requirements. So that's my little disclaimer. We're going to do our best to answer all of your questions, but we might not have them all. So I have a couple questions I've prepared for the panel, and we'll go through those, and then we're going to open this up to a Q&A. We've had some of those submitted in advance that we'll ask, and then we will ask, you folks can also ask your questions either in the Q&A or the chat function, and we will do our best to answer as many of those as possible. So just kind of to set this up and just general understanding, Noah, what are kind of the basic rules for calculating forgiveness?
Sure. Thanks, Greg, for the question. And as I get into that, as part of a show and tell, one thing we could do to enhance and provide a visual to address the question might be to bring up the PPP SBDC program summary fact sheet. With the latest one at bizcenter.org on the COVID-19 page has an example of the calculation for calculating changes in FTE. So I'll just talk through that a little bit while you try and find that. So for forgiveness of the PPP, there's kind of the overarching goal of the Paycheck Protection Program is to keep people on payroll. So keeping that in mind, the guidelines of this forgiveness of the program is really, the target is they want businesses to spend at least 75% of the proceeds of the loan on payroll. So obviously folks are going to do the best they can on that. If they spend less than 75%, forgiveness will be reduced. And I think SBA is going to release some additional guidelines on how that works. But let's say you spend 75% of the loan proceeds on payroll, or maybe even more. So what you got to do is you got to look at what your average FTE count is for the period. So period covered is essentially February 15th through June 30. So if you have, 3 payroll cycles, you just average those 3 numbers of FTEs from each cycle, divide by your number of payroll cycles, and you get your average FTE count. So then you're gonna, and Greg, you can scroll down to page 3 or 4. Yeah. Let's see, 1 down, I think. There we go. So if you know your average FTE for the period covered, February 15th through June 30 of 2020, this year, you're going to take that and put it on top and divide that by the average FTE from the previous year, same period. So February 15th through June 30, 2019. And if you are a new business, that just started more recently and you don't have average FTE numbers from 2019, you could use your FTE count from January of this year, 2020, through February 29th, 2020. So, the example here is if your average FTE for this year's period covered is 15, and last year it was 40, then, you'd be at 37% or 37% reduction. So what they don't want you to do is drop your FTE levels, but you're going to do the best you can. There's even a provision in the CARES Act that essentially says, we're not going to penalize you if you try and rehire people and they won't come back. So they just decline to come back to work for whatever reason. all you really need to do is document your best efforts to bring them back onto the job. And again, this is another area where we're hoping for additional guidance from SBA, but let's say you do your best to bring everyone back on the job. You document that you've made those efforts and you still don't meet the, you still can't get your payroll numbers, your FTE numbers back up to where they were before. I think, you know, that's going to be a calculation that lenders will get more guidelines on from SBA. But the basic equation here is average FTE for this covered period, February 15th through June 30, 2020, divided by last year's FTE count from the same period.
So Noah, just to clarify, then if you have a worker who has a valid reason for staying home, meaning maybe they have COVID, they're taking care of someone who has COVID, they can't get childcare, something that is eligible reason to not go back to work, they can still count them in their FTE for their debt forgiveness.
Well, if they're getting paid time off, if they're getting essentially paid time off or paid sick leave, I think so, yeah.
Dillon, do you have anything to add to that?
Yeah, if they are, I mean, it's your choice to keep them on the payroll. And one thing that I was going to read that kind of expands on that note about your best effort and basically rehiring back an employee, and they say no, that they don't want to come back, or you at least, in order for that to be excluded from the calculation for forgiveness, the Treasury website has a kind of a Q&A that specifically answers kind of the documentation that you would need for that. And it says to qualify for this exception, the borrower must have in good faith and through a written offer of rehire, and the employee's rejection of that offer must be documented by the borrower. And then employees and employers should be aware that employees who reject offers of reemployment may forfeit eligibility for continued unemployment compensation. So that kind of goes back to the whole point of the PPP, is to bring people back to work, and maybe they won't physically be able to come back to work, or maybe your location isn't physically open for them to be on the job site, but that doesn't mean that they still can't be on the payroll and be either compensated or paid through PPP, and then for those funds to be eligible for forgiveness.
Great, thanks for
So,
that. Go ahead, Noah.
Yeah, question in the chat about what's the standard calculation to determine FTE for a part-time employee. It's my understanding that for these rules, they're kind of simplified. An employee is an employee. So they're looking at part-time, full-time as same. So the calculation we went into for loan forgiveness is for businesses with payroll employees. If we scroll down on the page, Greg, there's some information about forgiveness for sole props. Let's see. Yeah, it says loan forgiveness for sole props. So essentially, because if you think back to, as a sole proprietor, how you qualified for your loan amount, you had to look at your Schedule C, line 31 net income, and divide that by 12, and then multiply that by 2.5. So it's kind of a similar approach for determining loan forgiveness if you're a sole prop. Oh, good, you're there. Okay. So basically, you're going to take that same line 31, Schedule C net income amount divided by 52 weeks and multiply it by 8 weeks of covered period. So you're going to take your 2019 net profit divided by 52 weeks times 8 weeks, and then that's going to be the loan forgiveness amount for owner compensation replacement, as they call it. And then you're going to add in other amounts. You know, in here it's got interest on mortgage obligations, rent payments in force, utilities in force.
Okay, great. Let's see. I'm gonna switch over here. So, question, maybe Tom, you want to jump in? What are some of the differences that we're seeing between institutions in regard to reporting expectations or this forgiveness calculation? Any concerns or discrepancies or areas of caution for our listeners?
You know, right now it's too early to tell because we're still 2 to 3 weeks off before, and even probably, let's say almost 4 weeks off before, you know, borrowers and business owners can actually go in and start asking for forgiveness. So we haven't seen any of that yet. We haven't heard any of it. My instinct is it's going to be very similar because they're all working off of the same play sheet. So this isn't something that's negotiable. It's, as Noah has pointed out, and I sent out to, I think, yourself and several others this morning, links to the Treasury specifically covering the affiliated rules, the final rules, the FAQs, and all of this stuff. And so what I would say is for everybody the stuff that Noah has put out there is directly taken from this, so you can also use that. I'm not saying use the Treasury stuff over this. I think the stuff that Noah has put on those fact sheets are incredibly useful. They're very distilled and very focused on that, so definitely get that out. But I also sent out links to the exact information on it. We are hearing that they're going to come out with clarifications on that, but we've been hearing that for 2.5 weeks. I'm also aware of multiple bills that various senators have put in place to try to clarify, streamline, and improve the process. But until those are actually in law, and what we know, what we have today is the stuff right now, and that's what we can go off of. And so it's pretty much the same information. So, you know, Greg, I wouldn't expect bank to vary much because they all have the exact same guidelines. And so it's pretty clear cut. There's a lot of nuances as far as whether you know, how your business is formed, whether you're an S Corp, a C Corp, whether you're a sole proprietorship, on how to calculate this, but it's all spelled out. And really it goes back to, I think, what several of the, you know, I think Dillon and Noah both mentioned, and Greg, you mentioned too, and that is the whole purpose of this was to keep employees employed, keep them off the unemployment payroll. That's why the 75% for payroll, 25% for mortgage, rent, and or utilities. But it's pretty laid out, pretty cut and dry. There's always that one off that somebody has a question for, and I think that's really where you need to go back and talk to your financial institution where you got the loan from. I would say do it now, don't wait. And the other thing is, I cannot stress high enough, document, and keep good records, keep good documentation, keep clear-cut stuff. If there is any gray area, make sure you get back with your banker or your financial institution and say, hey, how do I figure this? Is this included? Or go to those fact sheets. I think I sent them to Lisa at the chamber, and I also sent them to you, Greg. I also sent them to several other people out there. So feel free to push those out. Make sure to get that one from Noah out there. That fact sheet that the SBDC has put together is fabulous. It's a great resource, and so also use that.
I'll make sure that we get all that in one spot for Lisa to send to everybody, because it really is good. Dillon, are there any uncertainties or gray areas left, or what's pressing for KeyBank right now, or questions that you're still hoping the SBA can provide some guidelines on?
Yeah, there are, I mean, The guidelines are pretty clear as far as from reporting and documentation wise. I'm kind of in the same position that all the other panelists said, as far as, you know, we can hope for the best but plan for the worst. And so when it comes to documentation, having more detail will put you in a stronger and better position to make sure that you can get as much forgiven as possible. So, you know, invoices, bank statements, copies of just all of it. If you are asking yourself, should I keep a record of this or should I really hold on to that? Yes, do it. I'd rather you have more than not have the documentation and get it kicked back. From what we know internally, I was on the call yesterday from our leadership team, and we're actually expecting additional application for forgiveness information directly from the SBA to lenders by the end of business tomorrow. Our goal is to kind of at a bank level digest that information kind of over the weekend. And, you know, the banks, what we're doing is we're just kind of copying and pasting word by word, letter by letter, exactly what comes from the SBA and the Treasury. We don't want to, we're not going off and, you know, coming up with our own thoughts or opinions about it, just because there's too much risk, wanting to make sure that this stays 100% guaranteed SBA loan. So with that being said, we are planning to host webinars at a bank level. We'll have one scheduled next Friday. At a bank level, there'll be 10,000 participants that or seats to where participants can join in. We'll record that. We'll put it on our website. It'll be a town hall. There'll be a representative from the SBA there directly. And I'm sure several of my peers in the banking industry are going to do the same, just to really help educate and communicate. But at this point, we don't have all the final details as far as, you know, how it's physically going to look. You know, we can talk and expect that there'll be some sort of portal-based electronic upload your information, submit your application for forgiveness. It comes to the bank. We have 60 days from the time that we receive the request to determine eligibility for forgiveness before sending it off to the SBA. So it'll be a process, but we're, as mentioned, it's a little too early to know all the fine-tuned details yet.
And can anybody attend that webinar? Or is that for eBank clients?
Yeah, you know, anybody can, and it'll be posted on our website under the PPP loan page. That's just key.com. But any of our applicants who've applied directly for this, they will get an individualized email and invitation. But expect the same type of thing from any financial institution. There's got to be some sort of communication channel to where they're sharing this information with their loan clients. So I don't think anybody's going to be left in the dark, because the banks can't afford to leave anybody in the dark.
That's good to know. So I have what's probably an unfair question to ask, but I know it's on the mind of a lot of folks. How does this play with the state in terms of state taxation? And I know we haven't gotten all of guidelines, or maybe there's some, or are we waiting for some? Tom, Noah, can either of you speak briefly to that?
Yeah, I can roll into that. So I want to differentiate between the EIDL loan advance grant or forgiveness versus what we're talking about with the Paycheck Protection Program. With the EIDL loan, and I know this is focused on Paycheck Protection Program, but I want to touch on that briefly. With the EIDL loan program, that advance is classified as a grant, and at this time, as of today, that advance is classified as taxable. So you'd need to include that as taxable income. But with the Paycheck Protection Program, it was written in the CARES Act that the amount of the forgiveness is not taxable. So it is not included as income as a forgivable loan in the standard sense. We also checked at and that's at the federal level. We checked at the state level, and they're following the federal guidelines, and they're not going to include it as income tax. We also just got notice last week that the Treasury decided that it was also not going to be included as income for the CAT tax either. So the forgiveness part of the PPP loan as of today is not taxable. Now, here's where there's a little bit of interesting twist to it, and that is the IRS came out a couple of weeks ago, about a week and a half ago, and they send a memo out saying, yes, we will not include it as tax, but because it's forgiveness, you cannot take those expenses and include them as an expense, which in essence creates a taxable situation because it reduces the amount of expenses that you have, which raises the income, which is the same thing as including it as income. And so we're looking for guidance. They're aware of it. They are putting it in. The senators here for the state are addressing that with the IRS. They're trying to get some clarification because they said basically that it's going against the spirit of what they put in. The spirit of the law, you might say, is what they put into the PPP program, the CARES Act. And so at this time, it's not classified as taxable income. However, you can't take the deductions off right now, off of your expenses. So we're waiting to get some clarification on that. This is one of those things I would say, stay connected with your CPA. I'm not a CPA. I don't provide that type of guidance. I'm just going off the rules that I'm reading here. So my advice would be talk to your accountant about this. And as everything, I think Dillon mentioned it, Noah mentioned it, Greg, you've mentioned it. These things change so rapidly that the stuff we're talking about today, tomorrow, a new rule, a new interim information may come out that may change what we're talking about. So really stay connected with your SBDC, stay connected with your lender, stay connected with your accountant, because these rules are changing constantly, and the stuff that we provide today may not be accurate tomorrow.
Yeah, we certainly have seen that to be true. Thank you. I have one more little question before I open this up and ask some of the questions that have been submitted in advance, and then we'll go through some of the questions that have been submitted in chat. It's my understanding that how this the PPP was written is that it's designed to be sold onto the secondary market. Noah, maybe you can speak to that. How does that benefit the loan holder? Can they refinance this, and if they have a significant amount of debt after forgiveness that they don't have to pay off right away?
You know, well, a couple things. So first of all, in most of the documentation, and I'm sure the term sheets that borrowers get, the maximum term of a loan that shows up there is 2 years. I'm pretty sure I saw in the CARES Act that the maximum loan term on the PPP, I want to say I saw that it was 10 years.
It's the maximum amount on the loan is 10 million. The term loan it's 1% for 2 years though.
Yeah.
Now that's something, Greg, I might want to weigh in on that. There's a difference there when you're talking about that it can be sold on the secondary market. That's really for the financial institutions so that they can maintain their liquidity, because keep in mind on the PPP loan, this is not the SBA lending the money. It is the financial institutions lending the money. The SBA is just merely guaranteeing the money. So what it does is it can create a capital and it can create a liquidity risk with the banks because they're having to lend out their own money. And I've talked to several banks that they were concerned about the amount that they were having to lend out because it severely restricts the amount that they have left to make other loans with them. So the SBA allows them to package them and sell them off to the secondary market so that they can recoup some of that money so they can continue lending their operations. So a qualified investor can buy those loans from a bank. So it's not really designed for an advantage for the borrower, it's designed for the lender. And so they can maintain the rights to service the loan, but what it does is it gets them off their balance sheet, recapitalizes the bank so they still have money to lend out so that they maintain their capital and their liquidity ratios. From the borrower's standpoint, it doesn't impact them other than they may have somebody else that holds the loan, but they should still be doing the servicing through the existing lender.
Gotcha. Well, thanks for that. I understood that part of it. I thought it might also be able to be an opportunity to refinance for the loan holder, but that would be another scenario.
Well,
So go ahead, Noah. Yeah, please.
Greg, I just want to add into that. You know, Tom and I yesterday were talking about, so if the term on for repayment, the maximum term on the loans consistently is 2 years, you know, that doesn't give borrowers much time to repay that, especially if they don't make payments for 6 months, because they're not required to. So I think it's pretty likely that there'll be options for borrowers. I'm not saying it's a guarantee, but I'm saying it's pretty likely that there would be some kind of product, or maybe they just go with a different type of loan, bank by bank, to refinance some of those payments. I think it's pretty likely.
So I might weigh in on that real quick. I just am reading legislation right here. It's not approved. It's merely being put together. And so do not rely on this other than just know that it's out there. One of the legislation is to extend the 2 years to 5 years. And once again, this is just legislation proposal. This is what I'm talking about. The stuff that, you know, Noah and I are talking about right now, the 2 years, it could come out Monday that it has been extended. I would not rely on that though, because this is just a proposal. There's really 2 things that you can do with it. So really what we're talking about is the amount of the loan that is unforgiven. So if you get a $100,000 loan, you get 80% of it forgiven. So you're left with $20,000 balance. That loan, it is then carried at 1% for 2 years with a 6-month non-payment. Now, during that 6 month, the interest of 1% is still being accrued. It's just you don't have to start making payments for the first 6 months. So you have 1 of 2 options. One is you can take that $20,000 that you didn't use for those expenses, and you can keep it as a loan, 1% for 2 years, 6 months of no payment, interest being accrued. Or you can take that $20,000 and just pay off that loan because there's no prepayment penalty. So one of the other options is if you do have some of the amount of the loan that's not forgiven, you can always just pay it off. You don't have to hold it.
That's a good point, and certainly the same with the idle loan as well. So let's start getting some of these questions answered if we can. I'm going to start with the ones that were submitted to us earlier. Has the SBA issued guidance on whether payroll and qualified overhead expenses allowed under a PPP loan can still be deducted as 2020 expenses?
SBA, no. IRS has come out and said that it cannot at this time.
Well, there you go. That's a straight answer.
And I've sent that, I think, to you, and I can send it to Lisa. I don't know if I sent that to you or not. I can send that to both of you. Keep in mind that is as of today, and that can change.
Yeah.
Hey, can we take a look at what that looks like?
Absolutely, please.
So, yeah. So I put a little side-by-side comparison together. Sorry, my thumb's right in the middle of the camera here. Hold on.
Can he share screen?
Oh. See that?
Yeah.
Okay, so on the left side, you've got without being able to take deductions for the impacted expenses that PPP essentially says you can't deduct based on the IRS notice that Tom was just mentioning. On the right-hand side is what you would normally do. You would normally deduct the expenses that you would have, that you'd be spending out with the loan proceeds, and your taxable net income would be like $5,000. But on the left-hand side, if IRS sticks to their guns and Congress doesn't change anything, those expenses you would have that you're spending loan proceeds on, you wouldn't be able to deduct them, and essentially you will be taxed on them because they just drop down to net taxable income.
That's a significant difference.
Tom, did I describe that properly? Are you in agreement?
Yeah, it
with
really is. I mean, it's either so the forgiveness part, and it's bouncing around here a little bit. So I'm looking at what was the amount on the PPP loan forgiveness. Say the forgiveness amount is $30,000. If under the normal guidelines, that amount would be taxable income. So basically your revenue would go from $100,000 to $130,000, which would increase your net income by that amount, which would bring it to $35,000. So that's what you'd be taxed on. Well, the CARES Act said, no, we're not going to include that as income. So the $100,000 revenue would stay the same, which would sound really good. But then the IRS came out and said, well, but you can't include it as expenses then, which then it does exactly what you just showed on the left-hand side. You can't reduce them as expenses, so it increases your taxable income from $5,000 to $35,000. So all they did was they didn't include it at the top, but they took it off from the bottom. So net you're still the same. And that is where the Congress has come back and pushed back on the IRS, said, listen, yes, you're following the rule of the law saying that you can't double dip, you can't get it forgiven and also include it as an expense, but that's not what we wanted. We wanted that ability to do that. And part of the reason why this is such a substantial thing, and I think Dillon, you mentioned it, and that is this was really designed to keep people on the payroll. And so there's the situation where you may be keeping people on the payroll, but they're really not working, meaning they're staying at home, they're not coming in, they're not providing the input that you need. But the whole reason why you did this was to keep them off of the unemployment insurance. And by doing this, you actually could be negatively impacted because you're paying taxes on that amount that you are getting forgiven. Once again, that is as of today. Hopefully they will modify and change that, but that's what we're looking at as of today.
Well, great. We'll have to keep our fingers crossed then, because that is a big difference. Next question. Is it correct that employee paid Social Security and Medicare are allowable PPP payroll expenses, but company paid matching Social Security and Medicare are not? Any volunteers on that one?
Yeah, I can get, I've got a question of, sorry. If you go back to that FAQ sheet.
Okay.
We have a section on there about allowable expenses and what is excluded from payroll. There we go. Excluded payroll costs. So there's a section in the CARES Act that says sorry, I can't read this. Oh, yeah, there we go. Yeah, I mean, it basically says, as far as I can read, that federal employment taxes withheld under chapters 21.2 and 24 are all excluded from payroll. So, I mean, to me, that means employee and employer side.
I do have a Q&A directly from the Treasury website on this question that kind of makes it a little bit clearer, hopefully. It says, payroll costs are not reduced by taxes imposed on an employee and required to be withheld by the employer. But payroll costs do not include the employer's share of the payroll tax. And it gives an example. If you have an employee that has $4,000 per month in gross wages, and say 500 of that went for federal taxes that was withheld, you could count the 4,000 in payroll costs. The employees would receive about 3,500, and then 500 would be paid to the federal government. However, the employer side federal payroll taxes imposed on the 4,000 in wages are excluded from payroll costs under the statute. That was as of, I think, April 20th on the FAQ sheet from the Treasury.
So it's really differentiating what is being withheld that the employer is paying versus the employee tax. Okay, great, thank you. That was perfect clarification, Dillon, thank you. So another one, and Dillon, this might be another one for you. Or I can pull that sheet up, might have it on there too. Utilities are a qualified expense under a PPP loan. Do these following expenses qualify as utilities? Cell phone, garbage, alarm, service, and security monitoring. And I guess the broader question is, I know that there's that list of eligible utilities. Is it really limited to that? Let me pull that up, but go ahead, Dillon.
The way I would answer that is that, you know, from the SBA guidance that we've received, there's nothing that really specifies every dirty laundry grocery list item of utility that you could possibly think of. With that being said, if you're a sole proprietor or Schedule C on a 1040 tax return, and in 2019 you had a utility line item that you did as a deductible expense, and if that included your garbage bill, your garbage service, and your alarm service, and your cell phone bill for business expenses, you know, under the language, I would submit that for as a portion for what could be eligible to be forgiven. And again, you know, if it's a service that was in place prior to February 15th, you know, you don't lose anything by submitting the request and the process for it to be included. So again, more is better with appropriate documentation, but is it a promise and a guarantee that your alarm bill, you know, security alarm bill might be included or excluded? There, we don't have that permanent concrete answer. But if I was the business owner, I would submit it.
Yeah, so worst case scenario, you submit it and don't get it, but you don't get anything you don't ask for.
Yeah, one thing on that I would just comment on a caution is the lawn service. I'm not sure you could count that as a utility. That may be a gray area. I'm not going to wade in on that. I think the rest of them, the cell phone, the other things, but the lawn care.
No, it was alarm, security alarm.
Oh, alarm. I thought you said
Yes.
lawn care.
Yeah, lawn probably not so much.
Yeah, I thought you said lawn care, and I was like, But yeah, alarm security, yes.
Great, that's helpful. And Dillon, I think you said it really well. If you had included it in your utilities in your tax returns, then that's probably a good indicator that you could do so again for the PPP. Great. Okay. Let's see here. Who makes the final determination whether the loan is forgiven or the amount forgiven? Is that the bank or the SBA?
Thanks.
Banks. Okay. One question I have that has come up is with the 8-week forgiveness period. As we know, a lot of folks aren't ready to open up, and kind of as you had mentioned, you can bring people on, but they might be sitting at home or might not be doing much. Is there any flexibility to the start of that origination date so they can try and capture a more productive 8 weeks, so to speak, or more expenses potentially in that period? Dillon, is that something that KeyBank has provided or offers in terms of flexibility on the start date?
No, as far as, you know, what we have so far, it's any expenses that have incurred or have come out or that you've paid out after the date that you received the money in your bank account from the PPP loan. So there are some instances where business owners have maybe either forfeited pay or they have some back pay from the previous weeks, or not necessarily prior to February 15th, but when the February 15th time hit, if they stopped paying themselves and now got PPP money to be able to put as an eligible expense that they can now pay for, that they didn't maybe have the means to pay for prior to receiving those funds, as long as that they're not exceeding the 100,000 per employee. When you divide that by 52 and times it by 8, that you kind of know what your maximum is that you can pay each person. That would be the best rule of thumb. But if you paid something out before you got the money and you want to include that, that's going to be tough on the documentation to support. It's really, if you haven't paid it yet and it still needs to be paid, maybe do that during your 8-week time period.
Yeah, I might just touch on that, Dillon, and you're dead on that. I mean, on the FAQs, it touches on that, and it does say it has to be paid within that 8-week period. It's not flexible. And so that one of the questions on the FAQ was, well, I had an expense like for rent that I got the money today, but I paid my rent yesterday. Can I include it? And the answer was no. It has to be paid within that 8-week period of time from the time that you got the funds. One of the challenges that we're also faced up to is that there's a June 30th deadline that it talks about too for payroll. And for the second round, that 8 weeks goes beyond the June 30th timeframe. So that has been brought up. They're looking at it. They're talking about changing that. But right now, if you have funding through the second round, you need to make sure that that 8-week period falls within the June 30th, or you need to talk to your bank as far as how to do that. One item too is those expenses are not on an accrual basis too. So you can't come in and say, hey, I've accrued this expense. It has to actually be paid out. So one of the suggestions is if you have some like rent or some other expenses that you're going to be paying, or like payroll, if you do payroll twice a month, you might want to do a third period payroll just to get that payroll within that 8-week period of time. And so you may, on June 28th or 30th or whatever, you might want to do another payroll if it makes sense to do so, to include those expenses in the 8-week period and for forgiveness. Dillon, do you have any thoughts on that?
Yeah, I would totally agree. The bank's going to be looking for documentation and expenses that were in the eligible categories of buckets of money during that 8-week period. And then, one other thing that I just wanted to read that was guidance directly from the SBA to lenders. And the question is, can lenders rely on borrower documentation for forgiveness? And the answer to that is yes. The lender does not need to conduct any verification if the borrower submits documentation supporting its request for loan forgiveness and attests that it has accurately verified the payments for eligible costs. The administrator will hold harmless any lender that relies on such borrower documents and attestation from a borrower. You can imagine the scale and magnitude of how many applications and how many dollars. And so, not that it's a full honors system. You're going to need to have your documentation 100%. But there is going to be an element that if your loan amount is under $2 million, we're going to be asking for the supporting documentation and your attestation saying that that's correct and true for what was paid during that 8 weeks. If you're over $2 million in loan amount, you're going to go through a whole kind of deep audit process, not only from your lender, but also the SBA directly. So it might sound a little bit worse than it really is, but if you've got all your documentation and you've done all your payout within the 8 weeks, you should be in good shape.
So sounds like self-certification or verification in that sense. So hopefully that'll make things easier for everybody. So I've got my loan. I've submitted my documentation for forgiveness. How can I verify that? What do I get back from the bank or from the SBA that states, okay, you are forgiven and you can take that to the bank, so to speak?
At least we don't know yet. We're still waiting for more guidance from the SBA on the actual application process for forgiveness after the 8 weeks is up. A lot of lenders are still in the throes of funding for round 2 of PPP money, and the full shift hasn't gone 100% yet on the forgiveness side, but it is going to be probably tomorrow in the next 1 to 2 to 3 weeks, and really determining the mechanics of that process. Are you going to go to a portal? Are you going to get a confirmation letter? Are you going to be able to upload everything? All of those details are going to be hashed out in the next 14 to 21 days.
Great. Yeah. So patience, I know that's hard right now, but we are kind of in a holding pattern for some of this. I think, Noah, you had answered this question already, but I just want to make sure for Cheryl that she got her question answered. What is the standard calculation to determine FTE for part-time employees?
So my reading of the guidance that's out there is that they count part-time the same as they count full-time.
Okay, so that's one and the same, part-time and full-time.
Right.
Great. Well, that's go ahead.
There was also, I see a question on here about workman's comp as a forgivable expense. I would count that as insurance, and I think insurance is insurance premiums are covered under payroll.
Yeah, great. Question from Robert: if an employee went on unemployment temporarily, are they considered eligible for payroll through PPP forgiveness?
I don't think the employment department has issued guidelines on the interaction between PPP money and unemployment. So, I mean, that said, there isn't guidelines from the state on how that would work, but my guess is, if you brought them back on the payroll, then they would be, those payroll dollars would be covered if it's during the covered period of time.
Okay. Dillon, Tom, any other insight on that? Does that feel right to you?
Yeah, the only thing I would add is that, if you've got an employee who's on unemployment, there is caution against the double dipping piece of being on the unemployment system and the PPP care system. So if the employee is going to have to go through some, attestation through whatever state that they're applying for unemployment, saying, when's the last time you worked? How much did you get paid? There's going to be information. So if you put them on the payroll with PPP money, make sure that they know about it and they know what they're getting paid, so that they can do accurate reporting to the unemployment department. Great. Which will impact how much they get from them.
Tom, did you have something to add? I wasn't sure.
Yeah, I would just echo what Dillon was saying. I mean, the whole purpose of this was to reduce the amount of stress on the state's unemployment insurance program by keeping people on the payroll. And so if you do have somebody who is on unemployment and they come back in, make sure that you do report that and they get off the unemployment, because like he said, it's double dipping, and that may be fraudulent. I'm not going to say, I'm not an attorney, but that may be classified as fraudulent. The other thing is too, and I want to go back to something that Dillon mentioned early on, and it's very, very key important, that we're hearing a lot of companies say, hey, I am trying to hire my employees back and they don't want to come back to work. What can I do? And so there's a variety of different things you can do. You can, and like he said, document the fact that you offered them a position back. And if they still refuse to do that, then you can provide that to the bank for, that forgiveness part of it too. It could also disqualify them from unemployment insurance also. And so that's something that the employee needs to understand, that if they choose not to come back, on a legitimate purpose. Now, they may also say that they don't feel comfortable coming back because it's not safe. And that's something that they may raise a case on. I'm not the expert on that. That's something that you have to check on. You know, if you have the proper social distancing, you're providing the PPE gear, the protection gear, and you're meeting all the guidelines and they still refuse to come back, then you may have a legitimate reason to say that, you know, they are not choosing to come back.
Yes.
But you do need to make sure that you're also meeting the state guidelines as far as providing a safe environment to them to come back also.
Yeah, I'm pretty sure that's accurate, and it's my understanding that just fear and concern is understandable, but it's not a justifiable reason to not come back to work if your
Correct.
employees are providing a safe place for you to come back to work, and it is grounds to lose your unemployment.
Yeah.
Samantha states full-time employees at her company are recorded at 32 hours per week. For full-time, can we use that since it's our company policy, or do we have to use 40 hours? Anybody? I don't think your company policy would supersede the definition of FTE. That would be my guess.
Correct.
Okay. Let's see. The next one is for Noah. Oh, you already provided that link. Thank you, Noah. It looks like we have just a verifying statement. So essentially income from a forgiven PPP loan is taxable. That's Bruce's statement / question.
Well, the answer to that is technically no, it is not taxable. And it's very clear on that, because for it to be taxable, it'd have to be included as income, which it very clearly says it's not. Now this is, and I just sent you, Greg, a little thing where it says IRS treatment of PPP loan proceeds imposes unexpected costs. And the whole point on that is, and this is where it's technical versus reality. Technically, no, it's not classified as taxable income because it's not classified as income. But on April 30th, the IRS released Notice 2020-30, which provides guidance on the deductibility of otherwise deductible expenses incurred in a trade or business if a taxpayer receives a loan through the Paycheck Protection Program. The notice states specifically that clarifies that no deduction is allowed for an expense that is otherwise deductible if the payment of the expense results in forgiveness of a covered loan and the income associated with the forgiveness is excluded from gross income. So it's kind of double speak in that no, it's not classified as income, but you just can't take it off as an expense. So the net result, what Noah just showed, is you still increase net income. Now, let's step back a second too and talk about reality. A lot of businesses, I could see where this could be kind of discerning, kind of, you know, give you some heartburn at the same time based upon where we are right now. I think take a hard look at it and ask yourself, are you even going to show a net income, a positive income this year that's going to be taxable? So this may not even be this may be a non-event. A lot of businesses are going to be running losses this year, and so this may not even impact it. Once again, I'm not a CPA, I'm not a tax advisor. This is information you really need to be sitting down with your CPA and having this discussion with this knowledge. Sit down with them and say, how could this impact me? We need to do some tax planning. Is this even going to impact me? But I think this is information that, as of today, what we know as of today right now, would be information I would really highly recommend that you go talk to your accountant about.
Great. Thanks, Tom. He's not a CPA or tax advisor, but he has played one on television. So we have scheduled this till 11, FYI. But for those of you who have to jump off, it's understandable. I think we're going to go to 11:30, and we will be recording this for all of those who do have to jump off. Lisa posed a question: are bonuses and commissions paid out considered a normal payroll cost that would be forgiven?
As long as it doesn't exceed the 100,000 per employee divided by 12.
And that's same for self-employed and sole proprietors, right?
Yes.
Yeah. Great. Okay.
But they're calculating, if they're a sole proprietor, they're calculating, their net income from 2019. So if their net income was over 100,000, then they would cap themselves at that 100 mark. If it was less, then they would use that amount to pay over 8 weeks.
Great. So I think Paul needs a little clarification here, and fully understandable, because I know I gloss over pretty quick talking about some of this stuff. So I believe this is in reference to our conversation about what's included in terms of federal taxes. Would that mean when you are calculating the forgiveness amount, you need to only include the gross pay of employees and do not include Social Security and Medicare employee amount? Is that accurate?
I would say that would be something really for Dillon to address, because that's part of the forgiveness part of it.
Mm-hmm.
And so my understanding is, and I'm really going to fall back on Dillon on this because he's the one that's going to have to be calculating it. But my understanding is the employer part of the federal taxes that are paid are not included in the forgiveness part.
Right. It's the employee part, not
it's the employee part. Yeah. So this is really to benefit the employee and to help them. I mean, it kind of helps the employee, but it helps the business owner cover some of those expenses associated with it to keep them off of the unemployment insurance.
Mm.
Yeah, the only thing I would add is just kind of keep that example in your mind. If you have an employee who gets paid $4,000 in gross wages for the month, and $500 of that goes to federal taxes or to whatever else, you would still count $4,000 as the gross amount of the payroll cost for the employee. Any employer tax portion would be excluded.
Yeah, great. Hopefully that clarifies it, and I know that it gets confusing. Carmen asks, do hiring bonuses qualify as payroll expense? First time I've heard that question.
If it's cash, if it's cash equivalent compensation to an employee that doesn't exceed 100,000 per the individual, when divided by 12 or 52 weeks and times it by that 8-week qualifier, I mean, that would be an equivalent.
Yeah, that makes sense.
Yeah.
No shaking his head. Does providing food at our expense qualify a payroll expense? It is part of our compensation package, but it is a payroll. But is it a payroll expense?
I don't see how that's a payroll expense.
Yeah, I think that's just something you could just deduct from your taxes, maybe. Anybody feel differently? Tom, Dillon? No. Okay. Okay. Chris has a statement. 8 weeks is not flexible. It's based on date that your loan was funded. It would be nice if SBA would extend the 8-week time frame. I think you would find most people would agree with you there, Chris.
And there is legislation, just to let you know. Once again, this stuff that I'm talking about, when I say there's legislation out there, I'm aware there's legislation out there. It is not law. So don't go running out there and saying that, hey, I heard on this webinar that this has been done. I'm just saying that it has been proposed. There is proposals out there right now to extend it from 8 weeks to 16 weeks. I've also seen where it's to lift that June 30th requirement. So the Senate and House are aware of these restrictions. They're also aware of what is happening, so they are looking at addressing them. So I'm just saying out there that yes, the congressional staff are aware, especially the Oregon congressional staff are fully aware of this. They are making some requests that be changed. So once again, stay tuned, stay connected with, and I don't know how I can say this more, stay connected with your lender, stay connected with the Small Business Development Center, stay connected with your chamber, because these things are changing rapidly. And as of today, the answer is no. It is a hard 8 weeks. They may modify that. So just be aware of that and stay connected. But if you're doing planning as of today, plan for those 8 weeks.
Yeah.
But it may change.
Yeah. Yeah, let's hope there's some more flexibility there. And of course, if there is, it'd be something that would be applied across the board. I think we answered this, but let's just make sure. Cheryl asks, do expenses have to be incurred and paid during the 8-week time frame? That's a yes. Affirmative.
Yes.
Dimitri asks, how do we apply or determine eligibility for the second round? I'm assuming, Dimitri, you're asking about the second round of funding for the PPP. If that is the case, then you can just apply with your local lender and other financial institutions that are SBA certified. And if you are a sole proprietor, self-employed, LLC, you're eligible. So it's a very long list of eligibility. If that's not your question, please feel free to elaborate there.
I think one of the questions, Greg, that has come up in the past is how does the second round differ from the first round? Dillon, you can answer this. My understanding is it isn't. It's the same requirements.
The only difference is that there were specific carve-outs, 60 billion to be exact, for small and mid-sized banks and community development institutions in an effort to get money to underserved rural businesses.
I had a brief question. So to elaborate on what I was saying, I was just asking if, so the second round is just for people who didn't make it to first round funding. Is that correct?
Well, yes, you can't have 2 PPP loans. So
okay.
Unless you have 2 different entities. If you have 2 different businesses, that's fine. You can apply for another PPP loan for, a sole proprietor versus an LLC, or if you have 2 LLCs. But yes, you can't get 2 for one company.
All right. Thank you for the clarification.
Yeah, absolutely. Is workman's comp a forgivable expense?
I think so. It's insurance.
Yep.
Insurance premium.
Okay, Samantha asks, if we received our PPP loan on April 15th, the 8-week period ends before June 30th. Do we have to stick with the 8 weeks and our time frame ends June 15th? Yes. Yeah, I can safely answer that one. Yeah, the 8-week period starts from when the money's in your bank account. Correct, Dillon?
Yeah, and the only caveat to that in that scenario is that if for some reason you had some FTE shortage or trouble bringing some folks back, you have until that June 30th deadline to get them, to restore them essentially to what it was prior to February 15th. But that does not extend your spend time of the 8 weeks from when you got the money. I mean, 8 weeks is 8 weeks, period. So in that case, April 15th, that's your start date. You have 8 weeks, but you have until June 30th to bring folks back if you haven't met your full FTE amount yet.
Great.
Oh, and I've got a question on that real quick, because I was reading something today where it said, because the whole purpose of this is to get back to full FTE where you were before. But there is some guidance that if you have a hard time getting people back and everything, that there is you can have like a 25% decrease, I think it is, and still get some of that as far as forgiven. Can you touch on that? just for those people, because I've seen some of the comments saying, I haven't been able to bring everybody back, and what do I do if I'm not at the full FTE, but I still want forgiveness? How do you address that?
Yeah, the biggest piece of that is that whoever you did bring back, if they were, if it was within 25% of where they were before they were laid off or didn't have any work available, then that won't disrupt portion of forgiveness. If it was more than 25% of what they were brought, less than what they were brought back on, then there'll be a corresponding percentage reduction of the forgiveness. So they give you a little bit of leeway there. That's still a little bit of gray area that we're looking for that additional SBA guidance to kind of help us with that on the bank side when we go to process these, and we're expected to get more. But that has come out that, if you've got somebody and you brought them up 75% or more of where they were at, that you should still be good. You won't be penalized necessarily.
So one other question I've seen a lot too, and I'll let you answer this one too, is, I had 5 employees and 3 of them I put out and I offered them back and they didn't want to come back. So I had to hire 3 other people back. Can I still count those other 3, even though they weren't the 3 I put off on unemployment? What's the answer to that? So I had 5, I let 3 out. They didn't want to come back, so I had to hire 3 people back. So I'm back at 5 FTE, but they weren't the same 5 FTE.
That should be fine. We're just looking at total FTE is what we're looking at. We're not looking at people's social security numbers and names and making sure it's the same humans. We just want that FTE restored and get people to work.
And just to be clear, make sure I have been answering this question right. When we're talking about FTE and bringing people back on, it's not employee specific, meaning you don't have to bring George Smith back. You can bring another warm body in his stead. Right. Okay. Robert has a question. He has an S-Corp and has had no paycheck since March. Can he receive backdated payroll from March when PPP loan came through in May? Maybe, Robert, if you can unmute yourself and provide some clarification in terms of what it is exactly you're asking, if you're still on the line. Because it's gonna, the amount that you're going to be getting is gonna be based on your income. So I don't know if either of you gentlemen can answer that without further clarification. No? Okay. Robert, if you are on there, feel free to unmute and clarify. From Lisa, does that mean that we are covering our furloughed employees' insurance premiums with the PPP money that we are not in compliance?
I would think that if they're still on the payroll, an insurance premium is part of the usable payroll expense.
Yeah. Lisa, I'm assuming that was your question, unless you were asking it from someone else.
I was asking for somebody else.
Okay. Well, hopefully that answered it. Nathan asks, if an employer is just now getting ready to open again and bring folks back, does it matter that to meet 75%, the employer is going to run some larger than normal payrolls late in their 8-week period? I would say no, it doesn't. And you want to get as much back as you can to get as much forgiven. I don't know if you gentlemen are reading that differently.
Yeah, the only other thing I would say to that is, what's normal? Like the whole, every business and every situation, what we used to know as normal is no longer normal. And from the lender's perspective, we get that. We're just looking for eligible category, eligible expense, not exceeding the 100,000 per individual, and kind of checking some boxes. So I wouldn't lose sleep or have heartburn if there's irregularity to maybe how you've done things in the past.
Mm.
And I'd add on to that too. I think part of what may be driving that question is a lot of these businesses, as they start back up, they're not going to go from, let's say you had 10 employees before all of this stuff. You're not going to probably start off with immediately 10 employees. You may start off with 5 and then ramp up over that 8-week period of time. And how do you deal with that, especially when you're trying to get this money forgiven? Number one is, I think it goes back to what Dillon says, document everything. The other thing is it goes back to what I mentioned before, you may want to do that one payroll at the very end of the month, right before your 8-week period of time is given up. So you might want to run 3 payrolls just so you can get it all in there. The other thing is, at the end of the day, if you don't use all the money for a forgivable expense, it's not the end of the world. You still may be able to use that money for something else and then have a loan to pay it back, or you may just be able to take that money and return it back to you. So the main thing is try to get as many of the expenses covered as you can, keeping it 75% payroll, 25% of the other 3 expenses to get it forgiven. But that doesn't mean that if it's a little out of whack, that it's the end of the world. It just means maybe some of it isn't forgiven.
Tom, I think that's a really good point to make. Not all business expenses are covered by PPP eligible uses, but there's a question in here. Jan asks about a retail client. If there's a retail client that needs COVID-19 supplies for employees, could they be paid with PPP funds? Well, it doesn't really fit into the use of funds unless they were to maybe get creative. And Dillon, maybe you can weigh in on this, on my idea here, but they might be able to add a few extra dollars to payroll so that employees can buy some of these supplies on their own.
Yeah, the only thing I would say to that question, as far as what to use the PPP funds for, the lender or the bank is only going to be looking at documentation that you want forgiven. We're not going to be looking at documentation of other uses. I mean, it gets converted into a loan and there's a payback term on it with an interest rate. So you won't necessarily be hearing from your bank. But to your point, if you want to get creative and you give your employee each a bonus to be able to, buy, PPE equipment or whatever, that's kind of your prerogative. We wouldn't police that by any means.
The one thing I might add on to that is, whether it's the EIDL loan or the PPP loan, make sure though that you're using it for legitimate business purposes and not personal purposes. If you ever get audited by the SBA or others, and they find out that you're using that for personal expenses or personal purposes, that would be in violation of what these loans are for. And so just make sure that you document what you use that money for, and make sure it's a legitimate business expense.
Yeah.
And that's the one thing that it very clearly states out on that, is this is not to be used for personal expenses. And
certainly for a lot of sole proprietors and self-employed, that could easily be a gray area. So be careful. Let's see. Adolfo asks, if you are bringing employees back now that the state is reopening and potentially your sales increase, is there a concern to be audited by the SBA and deemed that you didn't really need the loan, assuming the loan is well below $2 million? I don't think so, no. And I'm sorry, Adolfo, if that was sent to me privately. I don't know if that was not supposed to be read to everyone, but no, that won't be an issue for you. Just to reiterate what Tom just shared, just make sure that you're using that for legitimate expenses. They're really not focused on economic hardship in any of the, either of these loans, the PPP or the SBA. So you can be fully profitable and, still be eligible. Cody says, I have 2 employees that said they'd work for free, so I didn't pay them on my last payroll. I got my loan after that payroll date. I was going to pay them for that back pay now. Would that qualify? I don't know. That's an interesting one. Anybody want to jump in on that one? For the forgiveness, it has to be incurred at that time. So if this was prior to your loan, then you wouldn't be included in that.
Greg,
Yeah.
couldn't we, what Dillon said earlier, couldn't there be a bonus on the payroll and it's just paying your staff a bonus for this time, hard work, and then that would be basically their pay and then you go forward as normal?
That makes sense to me.
Is that accurate, Dillon?
Yeah, that's what I would do.
I think that's a great question that hopefully would be addressed by follow-on guidance from SBA for things that kind of fall in these gray areas.
Yeah.
The only other question I would ask there is, the employees that volunteered to work for free, were they collecting unemployment at the same time or not? That's just one other caveat that might need to be fielded. But I mean, otherwise, if you want to give them a bonus, a lot of employers are doing COVID bonuses, premium pays for just being able to come to work during this environment or time. So employers have the opportunity to be creative.
Great. Well, we have one last question. I know we're a little bit over. I want to respect all of your times here. This is some further clarification from Robert. Back payroll from March, did not get PPP in the first round in March due to lack of funding. They were shut down March 23rd and reopened May 1st. Bank called in May and approved PPP funding. Can I pay myself and employees for pay during time period we were shut down?
Tough question.
Yeah. That might be one that we have to get back to you, Robert. Let us, unless anybody has any further insight, we might need to do a little research and we can circle back, and if we can get an answer, we'll get it to Lisa. The one thing I would certainly do, Robert, is check with your local lender, talk to them, be transparent, be very open with where you're at and what's happened, and get their guidance on it. That would be my suggestion, because even if we said yes or no, ultimately it'll be your lender to make that call. Is that accurate, Dillon?
Yeah, that's and we're all going to get the same guidance. There's more guidance to come. It'll be sent out to everybody as soon as it's available. And so stay tuned for more, because it's not over yet.
Great. Yes, looking forward to that. Well, I want to really, really thank Dillon, Tom, Noah. I know how valuable your time is and how busy you all are right now, especially. Thank you for making this time. Thank you for all that you're doing to support the business community. We so much appreciate it. And same to you, Lisa. Thanks for setting this up, and thanks for all the work you're doing with our small businesses.
Thank you.
Thank you.
Thanks, Noah.
Yes. So I'm going to quickly say, for those who are still on, if you did not actually register with an email, you need to send that information to membership at the Dallas Chamber. So I will get this recording to you and all of the information that our speakers are going to give us, and we'll get that out to you. So there again, thank you guys so much for being on here. I really appreciate the information and just being upfront and being transparent for our businesses here in town. So thank you, and everybody have an amazing day.
Yeah, thank you. This is a
Thank
great
you.
panel, great webinar. Thank you.
Take care.